I'd love to take credit for it because a day is what is noise. I think in the past, FEIM, I can't remember, but Alibaba is more volatile, and so is that Lovin. So I'd be careful with both of those. But if you elongate your time frame, I think you should be fine. I'd have to have a look because they're not the type I'd say, oh yeah, 5 years from now. I'd need to have a detailed look at Rahim. I don't want to just dive in and say, yeah, it'll be fine. Okay, so that's what you do. By the way, if any of you do want to, and I see some of you have gone in, if that doesn't work, there is a backup site, because sometimes if everybody goes on at the same time, then that's the problem we get on there, and it gets a bit overcrowded. Now, other questions, you can go there. Everybody on the webinar gets a 40% discount because it's the webinar discount, and you get me for life as well. Okay. And I really think we need to get rid of these wealth managers who underperform. Do you calculate the Croki, or is this supplied to you by Goldman? No, Goldman don't supply it. The Croki formula is publicly available, but I have to calculate it from the data. Do you see what I mean? So it's not a proprietary, it's not a secret formula, if you see what I mean. So yeah, if there is, on CNBC, they were saying there have never been two 20% crashes in the same year. Therefore, is there any chance of a market going up? It's already crashed in April. Rahim, I'll give you an example. The third year after two positive years tends to be positive. So yeah, I mean, all of those things point to the upside. I'm just trying to pick things a bit cheaper if I can. The biggest problem I've got at the moment is the market's already highly valued, which isn't really a problem. Thank you, David. Does XXX not eroding your capital if S&P goes sideways? If it goes sideways, yes, it does, Stas. Exactly correct. But if you're going to hold for just one or two, so don't do triple leverage, basically, because it's not suited if you don't fully understand time frames, holding periods, and so on. Okay, so don't do it, and you shouldn't do it in your pension. I can do it because it's for my son. I've got 2 private jets in the back room. Okay, I haven't, obviously, but you get my point. What I'm saying, just because I can do it doesn't mean you should do it. In fact, you definitely, I'm going to make this official, you definitely should not be doing leverage in your pension. All right, I can do it, you shouldn't. All right, but yes, it does erode if it goes sideways. That's correct. Absolutely correct. There you go. What's that? 2 years of 0% returns. Here, let me show you some more. What's that? 5 years of 0% returns. Absolutely correct. Do you now see why you shouldn't be doing it? Okay. Anyway, since my son was born, February 2018. Oops. Let's assume we didn't get out in 2022. Then he's there somewhere. Okay. Lucky boy. Lucky for the world. Oops. Okay. But you shouldn't be doing it. Don't do leverage because you will blow up. All right. Now, what have we got? Thank you for the webinar. Sorry, Alpesh, in relation to above, should I use PEG as a metric alongside higher PE ratios? Why are you looking at higher PE ratios? You want lower PE ratios. PEG is good as a substitute. If you don't want to use PE, just use PEG under 1. We'll keep it pretty strict. But can you see, if you've got an under 1 requirement or a Sortino above 1 requirement, can you see how you need more stocks? Because you'll have so many you'll have rejected. It's like getting CVs for a job application. You know, these are all shit because we want them from, PhDs. Alpesh, are you in good? Oh, I think I said that. Son and wife is. That's all good. Okay, guys, I'm going to thank you for everyone who's joined the program as well. Any questions you have, let me know. Oh, John. Hi, Alpesh. In the scenario where you were in the Quality 5 Plus but are now out, and it's become clear that it's V-shaped recovery and feels too late to get back into those and not on GIP, what would your... I can't give you advice. What I can say to you is my wife and son are in, so that's half the family is in, and I'm just going to wait to pick some things up cheaper. It's the other half. You can do 50-50. I don't know why private investors think it has to be all or nothing. You could always edge in. 10%, 10%, 10% each month. You could dollar cost average in. I don't know. Private investors seem to want to pick bottoms and go all in. They're like the GB news of investing. It's all black and white and so simple in life. Okay. Or the socialist worker of investing. one extreme to the other. Hi, Alpesh. Where could you review Navy European Defence ETF? Please could you? Sorry, Chetan, I'm bloody blind, aren't I? Let me do that offline and come back to it. I'll make a note that there's been a request for that one. The issue is, I know what you're thinking. Oh, it's European defence. You can just simply use the daddy bear rule to stay in or out. I'll do a thing and I'll explain it. But you're against DCA. What's changed? Nothing's changed. I'm saying you could do it if you wished. I like to add to winners personally, and I like to. Dollar cost averaging is a good thing for retail clients who don't know any better and what to do. Okay, that it's not an obvious solution. I prefer doing what hedge fund managers do, which is adding to winners. So adding to winning positions once I've got profits. That's all. What I'm saying to you guys is, it's like me saying to you guys, you know what you should all do? Same thing Warren Buffett said to everybody, retail clients, get an index tracker, and that's it. Okay. But Alpesh, thought you were into liking stocks. Yeah, I'm doing that. Doesn't mean you should. You might want an easier answer or an easier life. An easier life is an index tracker. Okay, for you. Thank you, everyone who's been on. Love it. And let me see if there's anything else I've got to show you. Whoops. Yeah, do go. Oh, by the way, yes, a ton of stuff I've got to give you. I've got to put the files up. I'm also going to show you a brand new website with a whole load of free resources. Okay, I'm going to show you a bunch of free resources, which are on the campaignforamillion.com website. Okay, on that website, and the free resources are all here. There you go. There's a whole ton of free stuff there, which I think you will hopefully like, including books, amongst other things as well. Okay. Thank you all very much. Thanks everyone for being on here. I think if whilst I'm going to sign off, I think if you stay on, I'll still be able to get your emails, and I can do those offline later, or reply to them through TikTok or YouTube. By the way, don't forget, I have got a YouTube channel and free investing newsletter. Oh, I should put that up a bit, shouldn't I? There you go. And I highly recommend it.